Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here, and welcome back to another weekly watch list video. Thanks for tuning in. Thanks for watching, and thank you for hitting that thumbs up for me. All right, so let's get right into it. I'm going to try to do this super quick. This is the earnings for the week. Okay, so we're always going to start with our earnings. Then we're going to go to our economic calendar, which is jam-packed this week. But earnings season starts right here on Thursday. It always starts with the airlines and the banks. So you should buckle up for quite a ride. The earnings on top of everything else going on in the whole world. I mean, the entire world has been rocked with their currency by what the Fed is doing here in the States and how the dollar affects earnings. So, you know, we're going to have to see what they say, the banks, et cetera, et cetera. The economic calendar for the week right here, nothing scheduled for Monday because of the Columbus Day holiday. Fine. I think the bond market might be closed on Monday, but I'm not totally sure about that. So just double check that if the bond market is closed. But the markets are open. So what do we have this week? We have CPI. This is always a huge, huge market moving event. I can't stress this enough. If you're new to watching these weekly watch list videos, this is everything you need to know. You need to know when these economic reports come out. So Wednesday is the PPI, and Thursday is the CPI, and then Friday you have retail sales. This is also moves markets. So the data that we're seeing now is being traded heavily with algorithms, and every single data point that comes out seems to really be traded on and moves markets. So if you're in a trade or if you're scalping, you need to know, even on Friday at 10 a.m., you even need to know when these things come out. They're really important to know. You don't want to be on the wrong side of a scalp. A lot of times I'll like to wait, and I don't want to trade on at the moment when I'm scalping because it could move against you really quickly. So the sectors last week, right here, the 1 week, the energy sector was the absolute clear winner. And this goes back to last week when we made our weekly watch list video on Friday, right? So this is this past Friday. Energy was actually down 0.5%, not a lot. But in our last video, energy was the only green bar from that previous Friday, and it carried into the week. So that's why in our Discord, it's something that we were looking at. And I'm just going to show you my Discord right now if you're interested in joining. It's totally up to you, no pressure, but this is something we posted right here, XLE, and this is our Sunday picks for the week. XLE was at a weekly ascending trend line. Look for this to hold, and oil and gas stocks should potentially rise. So this is that trend line that I noticed last week, and this is why it was alerted in here, and it rocketed off of that trend line. So that's just something, if you're interested in our community, come on in and join. Right here, we're not going to start with the compass yet. You guys know that we're going to look at the SPY, the Qs. We're going to take a look at all those charts, which do not look good. But this is the dollar. So this is the US dollar, which has been on a rise all year long. This is going up, and the stock market is coming down. This is going to weaken earnings and hurt businesses that do business overseas. It's also a place that investors around the globe come to as a safe haven. So in a hawkish Fed environment, a tight monetary policy, rates rising, and the potential for recession, this is a store of value. And that's why we've seen the rise in the dollar. So, like I said, though, this inverse correlation with the market is the other way. Same thing with the 10-year. The 10-year yield has been going up all year. When the yields rise, the stocks affected the most are those tech stocks. Those stocks, those heavy growth stocks that you're paying for now for future growth, because the thinking is that money is not going to now be worth the same as it was before. So that's why when the yields go up and the rates rise, those stocks in the QQQ, the NASDAQ, they get hit the worst. And you saw that on Friday. The VIX, the fear index, this is something to keep an eye on. We did hit, over 30, and we've been in a consistent rise here since the market has been selling off. Not surprising. A lot of people are saying that we need that really big capitulation type of selling to finally hit a bottom. I don't know if that's going to happen. A lot of people are calling for that to happen, for the VIX to pop like over 40 and just people throwing in the towel. And that will finally be the bottom for now. And then a rally can, come after that. But that doesn't mean that has to happen. The markets are already down a ton. And the markets are pricing in a lot of the stuff that we're talking about here. Potential for recession, tight monetary policy, earnings that should not be very good. And we're seeing companies coming out all over the place that are pre-announcing their earnings as to not shock of how bad they're doing. So yes, nothing good, no good news really is coming out of the markets lately. And it's very frustrating. It seems like anything you do is not working. And that's definitely frustrating. So on the SPY, something that we showed during the week was this 20 EMA was being rejected. And we saw a really, really big rejection with the jobs numbers that we saw. So the market went down, right? Let me show you the weekly, which looks really bad. This weekly candle is brutal. That is a brutal candle. You can see here when you have like a bullish hammer, you get continuation. Well, this is not. This is the opposite. Anything can happen. We still are over that 20 moving average on the weekly, which is good. If this cracks though, there could be really further downside, but let's stay positive here, okay? So anyway, that's what the weekly candle looks like, but let's look at the daily chart. It's really we're still over those lows. We're kind of trying to find our way. As long as we hold up here, and we saw the selling down to just about the 360 area, as long as we hold up, we've seen this before in the past. The last time we had a sell-off right here and broke in the June lows, we came back up, 20 EMA, rejection, came back down, chopped around for a little bit, came back up, came back down. So there's a lot of testing that is being done. The same thing is possible here, unless you get that really big washout sell-off. But we won't know. I mean, we just have to wait. We got to see CPI. We have to see earnings. So at the moment, the charts don't look good on any stock. So it is what it is. But the Qs, same thing. Coming back down, testing the lows under the 200 moving average on the weekly. Not a great weekly candle. I wish that there's better news I could give you guys, but these are very, very bad signs for potential sell-off in the making. Doesn't mean it has to happen. I hope it doesn't happen. But just because I want something to happen or not doesn't mean it has to. Our emotions do not carry anything with what the market is going to give us. But you got to trade this market with every bounce. There's really no follow through. and it just keeps getting stopped and, you know, pushed back down. And, you know, on heavier volume, you guys know that's not a great sign. So that was the Qs. We'll look at the Russell. The Russell is still over its support, lost the 20 EMA and has been selling off. The Dow Jones, rejection at the 20 EMA, now coming back down to test out these lows again. I mean, every single thing except for XLE. XLE was a great call last week. You can see the trend line bounce in an uptrend, looks really good, bounced here, and has had a great week. Like we showed you guys just before on the sectors, up over 11% for the week. Very nice move. So, you know, stocks at this point, they don't look good. They're all of them are basically rejecting the 20, coming back down. Every single one. The charts just look like huge rejections. Meta, everything. There's nothing looks good right now. Everything looks like they're coming back down to test lows. So we're just going to have to wait and basically, you know, try to preserve capital, try to trade smart. If you're going to trade scalp, you know, you can also, you know, find good companies, start to create some positions. Don't go all in. Take some little bites of them. If they come down further, you can add to those positions on good companies. Can't stress that enough. Not on companies that might have a good day and then just totally tank again, but solid money making companies. So that's it, guys. Like I said, quick video here. That's what to look for the week. CPI is a big one. And then earnings season is a big time of the year. All right, so hit the thumbs up. I'll see you back on the next one. Take care, guys.